You bet, Max. We are certainly talking to a man who is very plugged into these numbers, and that's Dale Dirkholz of Grain Cycles. Dale, earlier this week, we had two reports come out from the USDA. We saw planting intentions, taking a look at what might have actually gone in the ground across the country. And we also had quarterly grain stocks, looking at what's left in the bins, both on farmers' home sites and at elevators. Let's start with the quarterly grain stocks right off the bat. Dale, looking at the corn number, it came in fairly well in line with analyst expectations. On corn, was there anything that surprised you with the quarterly grain stocks report?
Actually, personally, I was looking for a number that was a little bit larger than what the trade was looking for. And to me, the feed and residual number seems to be high given the stocks level that we're working right now. And that either indicates, well, we're either feeding more cattle or there's something amiss when we go back to last year's production number for corn. And if that residual is high, it would suggest that, that production number could come down a little bit here more.
That makes some sense. Dale, one of the numbers that jumped out at me was USDA does make a habit of differentiating whether the grain is stored on farm or at commercial elevators. And they reported just a little bit over 1.75 billion bushels still held on farms. Dale, when you take a look at the cash market across the countryside, do you think we really have almost 2 billion bushels still sitting around in farmers' hands?
Some of that may be committed, that we don't know, because that's just an inventory in the bin, and we don't know, if farmers have contracted for summer delivery or something, so, we don't know exactly, let's call it ownership. But I'm not really surprised at this point because farmers have pretty much through the whole game stayed pretty steadfastly bullish, although, the markets we've had since the early part of May in the corn market has kind of rattled their nerves a little bit here. And then of recent, we've had some of these renewable fuel rulings, come out that have kind of unnerved them. But I think farmers have always been holding back maybe more than a little bit in here, thinking, I'm going to play a little bit of a gamble here. And frankly, their income, because prices have been high this year, have kept their cash flow needs met and allowed them to kind of hold on to a little bit extra of that inventory. So I guess that doesn't surprise me wholeheartedly.
Well, that does make some sense. We do see farmers flush with cash making some sales earlier in the year, maybe keeping a little powder dry if they got burned last year, marketing their physical a little too aggressively early on when this rally started moving. Well, let's take a look at soybeans. Quarterly stocks numbers came out. They've got us at just about 770 million bushels of beans. Dale, that's half the quarterly grain stocks we had in beans just a year ago. So it does seem like the demand out there in the bean market's very real.
Yeah, it has been, and I think that's the thing we've got to reach back to. It wasn't that much of a surprise to the trade, pretty close to what they were expecting, a little bit less. The way I look at numbers, really pretty much on target with what I was expecting for bean stocks. But we've got to actually remember, the weekly export numbers we're seeing now in terms of shipments and these monthly crush numbers we're getting in here both suggest demand is a little bit of a soft item at this point, and even the USDA here a month ago went and bumped up their expectation for that ending stocks on soybeans just slightly. But it said, these demand pulls that have been a part of this market have really kind of weakened on beans. Doesn't say we're going to break down anywhere. And certainly until we get a new crop in the bin, probably isn't going to break down a whole lot. But it does suggest, demand has weakened with the higher prices.
Well, and that's what higher prices are supposed to do, Dale, right? They drive us up to a point, they ration demand, and we see some purchases pull back, maybe wait for a little better opportunity down the line.
Yeah, that really is the story. It's basically, high prices beget weakening demand. It's like low prices solve the problem because they tend to rein in the supply ingredient and encourage demand, but high prices do just the opposite. Which, looking at the planting numbers, which we'll talk about a little bit later, kind of surprised me. But yes, demand is weakening a little bit in here because of the high prices we're seeing and have seen now for the past few months.
Absolutely. We'll be back for more with Dale Dirkholz.